Thank you for joining me. I'm Alex, and I would like to talk to you about Shopify, which has been called the next Amazon by some people, and I don't agree at all. I don't think that they can compete with Amazon in pretty much any way, mostly because Amazon is there and Amazon has scale, and there's no way to get to that point really without having competition. So if Shopify were to be backed by a huge company that could get them to scale with massive investment, then they might have a chance, but it's hard to grow to that point without either losing a lot of money, which is where investors would come in, or having small and steady growth over several decades. And I don't think that, first of all, decades is a thing for Shopify, and second of all, Amazon would just let them get there without doing something about it, like just buy them, I guess. Shopify has an amazingly high market cap, so I don't think buying them at this point is really advisable for anyone. I just think that they're vastly overvalued, and I don't think that Amazon even feels threatened enough to buy them and protect their profits. So what they do is e-commerce, as I mentioned. I don't even know if they want to be a competitor to Amazon. I think that people just consider them a competitor to Amazon. And they do e-commerce hosting, which means that you can go on Shopify right now and start your own online store and sell stuff to people for reasons. And they actually streamlined the process a lot, so there's a lot of people just starting an online store and doing drop shipping and stuff like that. And many fairly young people are getting rich that way because there's actual online stores that ship stuff for free all over the world, and you can charge huge markups, and you just have to have really good search engine optimization and maybe ads and everything, and basically you have to start your own online store, and some people do that quite successfully. So the price right now is $314, which is up 6.5% today. PE of negative 400-ish, which means they're losing about 71 cents per share right now. Share price is $314, which is insane. They cite a forward PE of 331 or something like that, and it's just that's their projection for growth, and even if that holds true, that means they need to double their earnings for 5 years before their PE is actually in a reasonable level. So dividend and payout ratio obviously zero. Revenue $1 billion, which is up from 630-ish million. 50% growth is pretty much in line with what they had the previous years. So there's a steady and fairly big growth. Earnings negative 65 million from 39 million. So they're losing $65 million right now per year, which is definitely not terrible, and obviously that's not going to kill them ever unless it grows to huge sums. 65 million is a huge sum, but not in the grand scheme of things. So definitely wouldn't mind those kind of earnings in the growth phase of a business, and Amazon kind of stayed right around there for a very long time to grow business, get market share, get the scale that allows them to reduce their cost and everything. So total assets $2.3 billion, which is pretty nice, and up 100% from the previous year. Total liabilities $164 million, which is up slightly, and net tangible assets of $2 billion, which is up 100%, which is all amazing. And I don't really follow how that happens with a negative profit, but that's that. And obviously, if you're a dividend investor, this is not the stock for you. If you're a value investor, it gets kind of difficult. If you're a growth investor and you have an amazingly long outlook and investment horizon, I think that opening a very small position in Shopify could make sense, because obviously you don't expect them to increase their share price a significant amount when their PE ratio, their forward PE ratio, is over 330. So I guess you need to wait about 5 years-ish before you can see any significant gains there. And even then, you obviously have to evaluate the stock every year, see if they're still going towards a nice growth that you're comfortable with, or if their earnings are decent, if their revenue is growing at a decent pace. As a value investor, did I get that confused? As a growth investor, I think it makes sense to open a small position. As a value investor, things get more dicey. I don't think that this is really a good stock for a growth investor right now because of the amazingly high forward PE. I don't think they're going to pay a dividend in the next decade. So I just don't think that if you're a value investor, you really want to throw money at this stock right now. I think there's far better stocks right now. And I think it's easy to find a lot better stocks right now. And Shopify, for me, way overpriced right now. I don't expect them to go broke. I don't expect the share price to decrease significantly over the next few years, but I just don't see the huge growth continuing long enough for me to actually think that this is a stock that I should be holding right now. Obviously, going to reevaluate this in a year or so, look where the revenues are, where the earnings are, and see if they're growing at a pace that justifies their share price, which I don't think it does right now. So that's it for me for today. If you haven't already and you like this video, make sure to subscribe. I'm coming out with more videos every day before market open. I hope you have a successful day.